Julian, this is front and center. Equity outperformance by indices. What is an investor to do to catch up?
I think, in all honesty, Tom, you've got to look at it from a geographic point of view, and where do you think you can actually add value and beat those indices, and where are you going to use more passive investments, ETFs, etc. And that, as a wealth manager, is exactly what we do. So we look around the world and decide where can we add value. Where is that right now? Where do you add value? If I'm up 8%, and the S&P 500 is up 13%, 12 months trailing, what is that part of active management where I can add value right now? I think you can add value in the States, in undoubtedly small companies, in tech. I think that if you just want a bland S&P 500 weighting, then you buy that as the core and you add satellites around it.
Chris, what makes you unsettled in the markets right now? I mean, we saw this huge repricing in yields. That's a dollar move. I mean, oil is also part of the story, right? Because that's hitting emerging markets. Is this almost a perfect storm where there's not one big thing, but, the confluence of 5-6 factors?
No, exactly. Just saying earlier, kind of for poor kind of energy importers now, in emerging markets, it's a very kind of difficult environment. And as I was mentioning, if kind of US wages do push above, 3% next month, as our team believes, that's just going to push like Treasury yields on to 330, maybe 340. So the factors that have got us where we are today, while we're talking about emerging markets under pressure, I think that's going to be kind of unabated, I believe, in the next couple of months.
What does that mean for China? So Treasuries at 3.4, does it go up to 4% for Treasuries? And do the what do the Chinese do at that point?
Yeah, we're not looking for kind of 4%. We think probably Treasury yields top out maybe 340, 350 in kind of Q1 next year. But I think being an FX guy, for China, the key issue, I think for emerging markets investors in general, this 7 level in dollar renminbi remains a really kind of crucial level. China has shown that they want to resist the renminbi weakening through there. So I think that's going to be a hot topic for the next couple of months.
Julian, what do you see in equity flows right now? Forget about what people say. What are people actually doing with their money? Are they in the market? Is there an appetite to own shares? Or does yield finally play into the calculus?
Yield will play to a certain degree, but I think that most investors are remaining fully invested in equities and are musing what they should do in the bond market. From a European perspective, obviously, putting aside places like Italy, the attraction of the European bond market and the UK bond market are less so. I think that...
Well, no, continue, please.
I think that we will undoubtedly see more talk about US Treasuries. I agree that I think 350 is an interesting level. I would worry immensely if we saw 4, because I think that would put pressure on equities as well. And that could well be, we were talking about red lines and red zones, that could well be a red line as well.
Well, I love that idea. What is the red zone for equities right now? Is it just yield competition, or is it really about slowing, going back to Lagarde and the IMF, it's about a slowing GDP over the next 18 months?
Yeah, it's the rising the cost of capital against the return on capital. So consequently, you need to make sure you can invest in companies that are profitable and making a decent return on capital with a higher cost of capital. So that's going to be crucial going forward. So you need to look at companies with solid cash flow and companies that are undoubtedly going to prosper in the next few years and not be affected by the cyclicality of economies.
Right, but Julian, Treasury's up. That hurts one of the equities. How much?
In terms of what? Percentage down, you mean? Or
or just, size and...
I think sentiment as much as anything else. We've seen a nervy equity market since yields broke out in the last few weeks, and I think that nervousness will continue.
Very good. Gentlemen, thank you so much for the morning briefing. Julian Chillingworth of Rathbones and Chris Turner at ING.